going to bring up the moderator. We're going to have Ellen Harvey from our Small Business Development Center team is going to moderate this. Ellen is one of our primary lending experts. She's also the hub manager for the Kiva Columbus program, which I think we'll mention as we go along a little bit, and a wealth of knowledge along with the rest of our team. So again, if you are looking for funding going forward, I think one of the best things you can do is contact us at the Small Business Development Center and have an opportunity to meet with one of our team. So with that, Ellen Harvey.
How y'all doing today? Good, good, good. You learning something new? Wonderful, wonderful. This is the fun part, right? Money. Where's the money? Money, money, money. Show me the money. All right. So this is our debt financing panel. With us today, we have some banks, the Small Business Administration, and a credit union. So they're going to talk to us about their different products and what they have that can help not only with contract opportunities, but also for startup businesses that are in growth mode, but then also when you have a contract that you need some funding for, right? So we're going to go ahead and get started. I'm going to do a brief introduction of everyone. So first, and I would have had Kenneth go last because he's got a brief introduction here, but this is Kenneth Johnson here. He is with ECDI, that is the Economic Community Development Institute. They are the #1 SBA micro lender. They are on Old Leonard Avenue. He has over 15 years of experience in community development and lending. He's achieved over $2 million in loan funds to small businesses in 2020, 2021, and 2022. So he's been busy. ECDI is a CDFI, that is a Community Development Financial Institution. He has a BA Mathematical Science, from University of Cincinnati. Outside of work, Kenneth, we call him Scooter. So when you go after a loan with him, you can become familiar with him. He's gonna ask you for 1 million documents, and you can be like, Scooter, this is really wearing me out. Okay, so Scooter's the name. He enjoys church, family, friends, laughter, exercise, and a good bourbon. Where's the cigar? No cigar? Oh, okay, all right then. Okay. Next, we have Jerome Jones. Jerome Jones is a lender relations specialist with the Small Business Administration. Prior to joining the SBA, he was a certified business advisor. He was on our team at the Ohio Small Business Development Center at Columbus State Community College. So you're joining us today, in case you didn't know, this is Columbus State Community College, and we are the Small Business Development Center. Okay, all right. And so he has worked with us for many, many years, managing member of the Dan Ash Group, LLC. He has also served as VP of Lending with the Economic Community Development Institute, ECDI. Back to Kenneth, right? We all kind of worked together at some point in time. And he is and was the Vice President of Business Services at Ohio Credit Union, where he was responsible for the Business Loan Department, Vice President of the Community Development Lending for Key Bank, a Senior Loan Officer for Community Capital Development Corporation. Jones is also very active in Central Ohio community, having served on the United Way of Central Ohio Finance Committee and the City of Columbus Loan Review Committee, as well as having served as a board member of the Columbus Urban League. Jones is a recipient of the SBA Financial Services Champion Award, the Frank W. Watson Advocate Award, is a certified economic development finance professional, a certified business advisor, and attended Jackson State University and Franklin University. All those accolades. Woo, okay. That's wisdom, right? Experience and wisdom. So when people talk to us to have those kinds of accolades, those kinds of experience, we want to listen, right? So next we have, okay, I'm gonna apologize ahead of time, okay, but we're gonna try it. Maglina Kovetsky. I knew I was gonna do bad. Kovetsky. Listen, I've tried. Vice President of Community Lending Program Manager at Huntington Bank. She is the Community Lending Program Manager, and she's over Huntington's Lift Local program, nice specialized program that they've put together to assist women, minorities, and veterans, those that are disadvantaged. Maglina has almost 20 years of experience in banking, all with Huntington. So she knows Huntington in and out, okay? 18 of them working with businesses of various industries and revenue sizes. She has a Master of Business Administration degree, MBA from Franklin University in Columbus, Ohio, and a master's and bachelor's degree in business from Trachea University in her home county of Bularia. Okay. Last but not least, we have Jeffrey Washington. He is with Right Pat Credit Union. He is the Business Community Development Manager. He's very passionate about the work that he does, and he also leads a program, again, for women, veterans, those disadvantaged, and minorities called SOAR. He supports businesses in his communities across Dayton, Cincinnati, and Columbus. In his regional role, Jeffrey focuses on empowering small businesses to grow, thrive, and succeed by addressing their unique needs with tailored financial solutions and exceptional relationship support. With more than 15 years of experience in financial services, Jeffrey brings a strong background in management, relationship building, and commercial lending. His expertise in strategic planning, risk management, and operations, combined with a deep-rooted commitment to community service, has helped countless businesses navigate challenges and reach new heights. Jeffrey is especially passionate about serving underrepresented communities and small business owners, ensuring they have access to the resources, education, and capital needed to build lasting success. He's known for his collaborative approach, deep listening, and practical guidance, making him a trusted partner to business leaders across the region. An Ohio native and proud Midwesterner, Jeffrey finds joy in helping others unlock their potential outside of work. He enjoys quality time with his family and staying connected to his community. He says his passion is helping business owners reach potentials they didn't see as possible. That to him, being a relationship manager means looking out for people and being present when they need you the most. That's what he believes he does best. So please give a warm welcome to our panelists. So as you can see, as I mentioned, we have a very diverse group here that have worked in banking institutions, community development institutions. They've worked at various other banks and credit unions and so forth. So they're going to be able to share numerous funding opportunities that are available not only at their banks, but from experience that they've had as well. So with our banking partners, understand that they have many products when it comes to lending, but in addition to that, they also have products as far as checking accounts and credit cards and so forth that are also available to serve small businesses. For our community development finance institutions like ECDI, they offer a lot of other trainings as well. So we're going to get into all of those kinds of things. So today, our focus is contracts, right? Procuring contracts. And for those of you who have never went after contracts, when you are looking for a contract, you need to get your funding in order ahead of time, right? There are opportunities for contract financing. They are rare. We do have one of our panelists today will be able to share information about some contract financing, but you may typically be looking for just traditional lending products that the banks offer, ones that they have modified and specialized to offer special programs, others that are going to fall under SBA. So let's get started. I want to start with you, Kenneth, at ECDI, about the core product you have on contract-based financing. Can you please tell us a little about your contract loan?
Sure, thank you. Hey, again, and we want to thank Columbus State Capital Crash Course for having ECDI here today. Really appreciate that. ECDI Contractor Resource Center offers low interest short-term loans. So pretty much how that basically works, if you have a contract, if you're like, I'm going to use construction, if you're in the construction industry and you're a subcontractor and you have a contract that I'm just going to use on an amount of 50, that's going to pay you $50,000. And what happens in this industry, a lot of subs need funding to start the contract. We will fund up to 50% of the contract on most times to get you started. What we do ask is that the term is between 6 to 9 months. Pretty much that's pretty much how long the contract will last. And there is a 5% fee.
Okay, thank you for that. So for the rest of our panelists, if you don't offer a particular contract financing loan, what of your loan products would you say would be something that our participants today should pursue if they're looking for funding, maybe for equipment or working capital in preparation for going for the contract?
Testing, can you hear me? So probably our most widely known and utilized program is the SBA 7A Loan Guarantee Program. Ironically, we don't lend any money directly. So the 7A program, you would go to them. What makes it so flexible is that you can use the SBA 7A program for any legal lending business purpose. Equipment, working capital, real estate, it's very versatile. But as Ellen stated, you have to have your ducks in a row before you come to seek financing. That's very important, and it really came out during COVID when everyone wanted an EIDL loan or a PPP loan and had none of their financials in order. And it takes so much longer when you don't. So just be prepared, and SBDC can help you get prepared for any type of financing.
So I'm going to put you on the notice here. Let me ask you about this. So the SBA rolled out a new program, the SBA 7A Working Capital Pilot Program. Can you tell us a little bit about that and who might be participating in that here in Ohio that we could connect them with?
Sure. So that's open to any SBA approved lender. And at this point, that's 99.9% of every bank and credit union out there. It's harder to find someone who's not a participant. You can go up to $5 million with that program. But again, you have to qualify for the $5 million. And most of the time, the people who call me directly for financing are looking for less than $100,000. So that's why it's ECDI most of the time when you need $50,000 or so. But the advantage to the working capital program, the fees are a little less, the loan amounts are a little higher, and they're a lot more flexible on their terms and conditions.
And before I let him off the hook, I just want to point out that the SBA, the Small Business Administration, does not actually do the lending of the loans, right? They are the support, the guarantee for the loans. So when you are pursuing any kind of SBA loan product, you will be going to your credit unions, your banks, and your CDFIs.
Let me add one more thing before I forget. So Monday, the 1st, the SBA increased our loan amounts for manufacturing businesses. So any manufacturers in here who manufacture anything? So you have to be NAICS code 31, 32, or 33. Now you can get up to $10 million. Our previous cap was $5 million. So that's a pretty big deal. Yeah.
And if you are not a manufacturer, but you know somebody who is, right, please share that information. And they also are waiving the SBA fees on that program as well right now? Oh, they're not. Was they at one point? I thought they was.
That was last year.
Oh, okay. All right. See, that's why we have them here. Magdalena, you wanted to share, please?
Yes, perfect timing for me to share. As Ellen mentioned, I'm with the Huntington Bank for almost 20 years now. And I manage women, minority, and veteran microloan program for small business. But the program is also applicable for businesses located in low to moderate or majority minority tract based on the census. We are microloan program, 150,000 maximum. As Jerome mentioned, many of the small businesses, that will be enough for them. And there is a lot of positive things. Within 5 years, we've done over 250 million across the Huntington footprint, but we have zero fees of any kind. Not because the SBA doesn't charge us the fees, but the bank pays the fees for the qualified businesses. And we discuss working capital, we discuss in preparation for contracts. The program offers term loans with draw-to-term options for businesses in any life cycle stage. You could be a pure startup, you could be established business. At the same time, based on the creditworthiness of the individual and the business, they could qualify potentially for line of credit, which is outside of our program, but that could be a perfect solution for businesses that are looking to finance contracts where they do some expenses and wait a few months to get paid. But the program we have, we can help with anything a business can potentially need, including leasehold improvements, payroll, rent, utilities, inventory, vehicles. The only thing we don't get involved is real estate. More than one reason for it, but primarily because of the amounts too. It makes it hard to get real estate and do extra work on it under 150,000, especially nowadays. As we mentioned, we have no fees. There's only one rate, and we go as low on approval opportunity on the small business scoring system as the SBA is going to go. So if the SBA potentially says yes, we can say yes too. And that's something that we've been doing for 5 years. It's been very successful, and I can't wait to talk to more of you about that opportunity, and I'm just looking forward to all of us sharing options, because we all in this field together, and we just want to help the community grow.
And that's a very valid point, is that if one of the institutions are unable to help you, they often will refer you to someone else, right? So you might very well be starting with Huntington Bank, and Huntington refer you to ECDI, and ECDI may refer you to Huntington, or they may come together and collaborate on a deal with you, and both of them participate in that deal. Now, the one thing that she mentioned that I definitely want to point out is that their product, the Lyft product, does not have any fees. I'm pointing that out to you because most SBA 7A products, if it's not one that's been modified, been adjusted to address some of these concerns that we've talked about, low-income areas, minority areas, disadvantaged, and so forth, then there are going to be fees that are charged to you. So as you're looking and pursuing funding, these are questions you want to ask. What are the fees? Are there upfront fees as far as an application fee? Is there fees because it's an SBA loan? Are there prepayment penalty fees for when I pay the loan off early? So you always want to be asking, what are the fees? And that's why she's stressing to you that this particular product does not have any fees. Jeffrey?
No fees.
Well, thanks for sharing that. And I hope you guys gather from what's being communicated today is that there's a synergetic community even, between all of us. And we work really diligently together to ensure that small businesses get the resources and support that they need. At Right Pac Credit Union, we have the SOAR program, like Ms. Harvey mentioned. It's a program that I created at the credit union about 3 years ago. And in that process, we've been able to help businesses for, as Jerome mentioned, all legal purposes. So you could have a variety of needs, whether that's, hey, I need a contract and I need working capital to be able to support that contract. Or, I want to buy a building, or I'm looking for commercial real estate. The program that I've created at the credit union does all of those things, and it provides flexibility in product. So that could be, hey, I just need something small like working capital on a credit card, or I need a line of credit to get me that support to facilitate that contract, or I need a term loan to be able to buy some expensive equipment that's necessary for your business operation. There's a variety of different ways that we can meet you where you are. And just like my partner said, we meet you at a variety of different life cycles. So you don't have to be a business or institution that's been in business for 20, 30 years, all right? You could be a startup and we can still support you. Now, that doesn't mean that you come to us without financial information. I think it's important to mention that, right? You need to be prepared or in the process of being prepared for lending. But even if you are, don't let that stop you, because we can help you through that process too. So myself and my team work in a way that we hold your hand through it, right? Whether you are a business that's been around for a long time or you're starting out, and we can help you with those products. Now, the SOAR program in itself is not a SBA product, right? We're doing this through what we would consider a conventional channel. So that means that you can get to closing relatively quickly. And then there aren't any SBA fees that you have or that we waive in the process. We do it conventionally. So that means that Right Pac Credit Union is lending to you just like we would any commercial client that would come in and say, hey, can I get a loan? So when you think about lending, those are some of the ways that we support in this program.
Thank you. Thank you. Now, let me clarify what he's saying when he's saying it's regular conventional. It's not SBA backed or supported. What that means is that it's not an SBA product, right? It's a product that the bank itself has developed to be able to offer to you as a small business owner. And so sometimes when you're looking for funding, again, you're asking these questions: what kind of loan is it? What kind of term, what kind of rate, and so forth. It's important to know if it's SBA or if it's conventional, because there's certain guidelines that go along with those different kinds of products. So I'm going to ask the group here, if you could talk about some of your eligibility guidelines that are specific to your unique programs and then other programs that you may offer. And Kenneth, I'm going to start with you again because I had you focus on the contract loan, but I know the ECI offers many kinds of loans.
So to answer your question, we offer many type of products such as working capital loans, contract loans, construction loans. There's a ton of products that we carry. Now, your question as far as eligibility standards, ECDI credit score, personal credit score, we look for a minimum of 610, which is pretty much the SBA standard. We ask that you've been, we don't care if you're a startup, established business, been in business 5 years, 10 years, 4 years. It really doesn't matter. We want to make sure you have everything that you need for a package. So you're going to need a business plan. You're going to need 3 years of tax returns. You're going to need those things and supporting documentation with the application. As far as background, one of the things that I will say this: if you're in a bankruptcy, your bankruptcy will have to be discharged for at least 3 years. If you're bankrupt, if you're out of a bankruptcy and it's been discharged for 3 years, we're going to be happy to help you out through our loan process. And other than that, on the background, as long as you didn't defraud a bank or defraud the SBA on a federal government loan, I'm sorry, on defraud student loans or default on a student loan, default on FHA, anything that has federal government funding, as long as you didn't default on it, we would be able to assist you. I think that's pretty much it. Yes, that is it.
So he pretty much mentioned everything. That's what 90% of us need. So just make sure you're good financially and your financials are sound. 2 things I want to add: any crimes against children, that's going to be rough to get through the SBA. And you can't be behind on your child support. You have to be current on your child support. Those are 2 additional things that Ken didn't mention. Bankruptcy still the same. Down payment. So be prepared for 20% of your startup. Just be prepared for that. Technically, you can get 10%, but be prepared for 20 because they're going to assess the amount of risk. If you're, and where's Kevin at? He knows how I love restaurants. Any food service in here? None?
None?
It's never been the case.
Somebody ain't telling the truth.
Yeah.
I know it's somebody.
So food service in particular is pretty risky to get started. And ECDI does a pretty good job, and I'm sure both Huntington and WritePad do too. But there's the most risk involved in food service businesses because most food service businesses don't know the business side of food service. They know the food side of food service, and that's what makes it rough. You just like to cook. And it's easier to lend to a small business owner who knows business very well and can't boil water than it is to someone who makes the best fill in the blank in the world, but they don't know business, because you'll go out of business rather quickly.
So I'm going to highlight a couple of things that was said there. First of all, they mentioned personal credit. Okay. So though you are pursuing a business loan, your personal credit is going to be taken into consideration, and that means your personal credit score. Now, every bank doesn't pull, or credit union or CDFI does not pull the same credit report. So you want to ask, what credit agencies are you pulling from, right? Because sometimes there's items that report to one credit report versus another, so your score might be higher than one credit reporting agency's credit report than another, right? So you want to know that. You also want to know what's going on with your credit report before you even start the process. So get that free credit report, take a look at it, make sure that there's no information that's on there that shouldn't be. And if so, when you're needing help getting your credit under control and you want some budgeting or some counseling, reach out to the Small Business Development Center. We have a partnership with the Jewish Family Services, the Financial Empowerment Center, and we can connect you with free resources to help you in getting things under control. So as you are looking at pursuing a business or going after a contract, you want to start early enough that you've given yourself enough time to save the money, to deal with any kind of credit, to put yourself in position to make sure your financials are complete so that you are in a position to move forward. That being said, and of course, jump in and add whatever you like as we go along, but if we could add to this, what is the time frame from you guys receiving an application, a complete package, tell them what a complete package may look like, and then being able to get funding in their hands? Because that's very important if we're going after contracts, right? We got to know that we have the money to be able to execute that contract. So we could highlight that, please.
Yes, I can speak to that real quick because while I manage the Live Local program, which is a SBA guaranteed 7A type of program, at the Huntington, we have all kinds of solutions, including the conventional solutions Jeffrey mentioned for more established businesses. Those go real quick. If a client is looking for line of credit, established client, more strong on the credit performance, they can get money within a few days. When it comes to the Small Business Administration guaranteed loans, there is, of course, different factors involved. If we exist in business, that might be one of those risky ones that Jerome mentioned, like restaurants, construction, etc., which we do a lot of those for the Live Local program, by the way, and it's still 10% money down when it comes to pure startups and acquisitions. We still might be able to do those faster because we don't need a financial review on many of those. But we need to go through two processes. One is the credit and one is the eligibility where we get the SBA approval. We recently had a government shutdown. That's an external factor that none of us could control. We were not able to get SBA approval numbers for over 40 days. So we were not able to close those loans. But otherwise, if you have an existing business, I would say just be prepared. It might take at least up to 30 days if there's no financial review, or faster. If you have startups, if you're planning to buy a business, especially pure startups where a financial review will be needed, equity injection needs to be verified, give yourself at least 60 days. We can do it faster, but we cannot always control what's going on outside of the bank. And holidays are coming. If somebody tells you that the holiday schedules do not impact a loan process, that is not correct. They do impact the loan process. So please be aware of that. Start early. If it's a startup, start asking for the money before you start working on the project. But do not hesitate if you have a newer business and you need money to come talk to the bank. Just be aware if you borrow money from somebody else to start the business and you are still in that startup stage, you won't want to go back to the same lender because that might be an issue for another one to get involved. That.
I'm going to ask her one question real quick. Would you have a credit score requirement?
So we don't have, so depending on the program, if it's a conventional, we might have some minimum credit scores depending on the business, okay? But the SBA programs, especially the Live Local program, we do not have a minimum personal credit score. We go by the small business scoring system, which is 140, and no, you would not know where is your business scoring system score until you apply. And that could change from one part of the process to another. So please take care of your credit. It doesn't have to be perfect, but all the stuff Ken and Jerome mentioned about the bankruptcies, issues with the government, and I want to throw another thing too. If you ever had any issues with the Huntington, where you charged off accounts or anything like that, it's unlikely we'll be able to extend credit at this time. Everything, yes. Luckily, we're not a very heavy credit card company. So that's less impactful. It's just more about checking accounts. You borrow money from the bank and you didn't pay us back, we unlikely will lend you again, which I think makes a lot of sense.
And Jeffrey, let me add one thing real quick. I'm so sorry. Let me add one thing before I forget. I'm getting older now and things be slipping, so I need to say it while I have it. Okay, so she had mentioned that they do not use a personal credit score. So see how every bank and credit union and CDFI is a little different, right? She said they focus on the SBA score. Nobody knows the science behind the SBA score. Unlike how we know how we get to a credit score, right? Certain percentages because of inquiries, certain percentages because of late payments, certain percentages a mix of credit and so forth, right? We know how we can manipulate that to help get our credit scores up, right? Pay down your revolving debt, immediately pops your credit score. But with that SBA score, that's a challenge. So I'm going to give you some tips for it. Just some tips, not going to say it's perfect science, but show that you have some money, right? When you fill out that personal financial statement, which you'll fill that out with every lender that you deal with, it's going to ask you for your debts and it's going to ask you for your assets. So debts is going to be referred to as liabilities, and then they're going to be looking for your assets. Now, what I want you to focus on is those assets. checking account, savings account, stocks, bonds, land you own, timeshares, retirement accounts, life insurance with cash values, meaning that you can borrow against it, right? Those are the things you need to be concentrating on, building yourself up, position yourself to actually go for funding, whether you're a startup or already existing and looking to grow. So assets is huge, right? Liabilities, you got to pay down those liabilities because you want to show that you are profitable, that you have positive assets. If you complete your personal financial statement and you show that you're in the negative, that means you have way more debt going out than you have in assets to cover it. That's a problem. You're not ready for financing, okay? We need to work on that. We need to put you in a position where you're paying down debt and you're starting to save some money. Now, that's huge when it comes to the SBA score, as well as, of course, your payment history on your current debt that you have, be it your personal and your business debt. Okay, so knowing what your business debt looks like as well is also important. And then all the other things that they talked about. Okay, Jeffrey, take the floor.
I think I forgot the question.
I'm sorry.
No. I remember. But, I see you guys taking notes, so I want somebody to write this down. Credit, cash flow, collateral, right? Credit, cash flow, collateral, and then I'm gonna add two more. Experience, and then character. All right, I changed it. Yeah,
You did change it up.
I mix it up a little bit, but all of those things are important, right? And we got to add the E for experience. Now, here's why I share this. Every one of us has a variation of one of those things or all of those things that we need at some point to be able to do lending for you. That's just fact. Now, we don't have a credit score requirement in this program, and I intentionally did it that way. And the reason why I did it that way is because we understand that stuff happens, all right? It's not easy to own a business, and the economy is not amazing. We understand that to be reality. But we've got to be able to show, okay, well, there's some experience here. There's some income coming into this business. There's some collateral that we might be able to touch on or pull if we need to, right? And then when I say character, I want to be clear about what I mean. Because just because your credit is not perfect, does that mean you have bad character, yes or no? No, it does not. Life happens. But what we can see from that is, all right, are there child support debts that maybe you haven't been able to facilitate? And if that's the case, can we help you get some structure and strategy around that? Or can we say, come back at another time when maybe it's resolved, right? Does that mean that we're going to lend to somebody with a bankruptcy? No, but explain what that represents. See, I'm not going to say the difference because there's some well-intentioned banks out here. But what I notice about the credit union in almost 20 years of working in finance is that we want to hear the story. We want to understand the nuance around how you got where you are. And we can use that information to determine if we can support it or not. So it's ambiguous, and I say that intentionally. No credit score requirements, but we want to see some of those things, a variation of those things that I had you write down. So, yeah.
I would like to touch on that. Great point, Jeff. I will tell you, and I will be totally honest with you, I will not say the person's name. I had a client, and she has probably paid us over $1 million, has never missed a payment, ever. She is a caterer. She's probably my mama. This ain't being recorded, is because I don't want this to get to my mama. She might be the best cook food I've ever tasted, without a doubt. Sorry, Mom, just in case she gets to see this. My apologies. Aunties, I want to make sure. But her score was probably about a 550. I don't want you to think that the 610 is the end all be all for us. We understand that we will probably ask for an explanation, and it is up to us as the relationship managers or the individuals that you're working with to try to find a way to get her done. I will tell you, most of my deals come from them, 80%. 80%. Well, right, Pat. We need to get it together. But most of my deals come from them and other entities. I don't really have to shop for deals. Excuse me. Most of them come to me. But right, Pat, we got to talk. We got to talk. Me and Jeff got to talk after this. But yeah, I do want you to know, just because you missed a certain widget is not the end all be all with ECDI. I will tell you that. And just because it doesn't get done on the first time, I may say to you, I'm going to need you to go talk to Ellen about this over at, this is what you need to work on. She'll be able to help you with this. Or I may see you may be able to go to Impact. There is a lot of, we work together to try to get this done in our communities. Thank you.
Absolutely. And you know, one of the reasons why we don't send a whole lot of stuff out is because we're able to do a lot of it. I mean, we get it done when it doesn't look like we should be able to. I mean, that, and I mean that humbly.
Jeff, I was just joking.
No.
I was just joking.
I mean it with all humility.
I wasn't trying to start no static up here.
No beef. But the reality is that we're able to, and that's a really unique process that this program is doing for people every single day. Honestly, if I could just speak to you guys like I would if we were on a couch just talking, the reality is this program is really unique because in a really unique type of way, it meets you where you are. You don't have to be perfect, right? We can help you. We want to know the story. It's important to understand how you got where you are and where you're going. So I look forward to talking to you guys about how we strategize and support businesses at all life cycles. But I just wanted to mention that it's a very diverse set of businesses that we're able to support, and it means a lot to me to be able to do that.
Let me have 10 seconds.
Oh, go ahead.
So yes, they may not have a minimum credit score. That doesn't mean you should not pay attention to your credit, because your credit score affects just about everything in your life
And the
now.
SBA
Cell phone, your car insurance is more, your home, everything. So definitely take advantage or take care of your credit. Another thing I want to mention is that, I forgot what I was going to say.
I'm sorry?
He forgot what he was going
Oh,
to say.
see what I'm saying?
He called himself old before.
That's what I'm
probably why.
trying to tell you. Trying to
Oh, God, it'll come to me in the middle of something. Had to do with your score. Oh, your story. Your story has to match your credit bureau report. Your credit report is a history. So you can't say, well, you know, I got hurt last year and that's why I couldn't pay my bills. But your credit bureau report says you've never paid on time.
Yeah.
That can't, it's got to
that
match.
again.
Your story has to match your credit score. So yes, they can listen to the story, but it's got to match. So those two things.
And let me just round it up here because things are getting passionate, as you can tell. And I'm going to be the person to finish. I'm very happy that we have a lot of options when it comes to financing. And in some cases, we, or either ourselves or another partner here in the field is able to say yes. But I want to bring attention to one thing, and I'm not going to expand too much on it, but I want you to think about it. Sometimes the right thing for the person is to tell them, no, not yet, not right now. Maybe we saw something that didn't show us that the person is ready. Maybe it's not the right timing. Maybe in the business plan or projection, they show something that we are not convinced that they know what they're getting themselves into. And I am equally proud. I don't make the decisions myself. I don't do the loans myself. I oversee it. Equally proud of situations where we tell the person, it doesn't seem that's the right time for you to open that second location. Don't do it. Straighten yourself up on the first one. You're going to try to grow yourself out of business, or you're going to bankrupt very quickly because you try to take on too many contracts you're not able to support. So I want you to always look at those two sides. It's not always easy for the banks to crush somebody's dreams, but sometimes it's the right thing to do at this time.
I want for you guys to touch on, what would you say would be 5 things that they definitely need to have ready to go when they're looking to apply for funding? And I'm hoping you say some of these.
I can easily start on that. First of all, we, especially for our program Live Local, we conveniently have some flyers that on the back of the flyer has a list of what we usually are looking for. Okay. And we're not talking about that every business will need that. But if you are to need financials, that will be primarily startups or expansions or acquisitions, buying another business. There will be the business plan, 3 years of business projections, 1 year personal tax returns. The personal financial statement that Hal mentioned, we actually have a form at the Huntington that's very simple, only 3 pages. And those are the main things. We also do have a national partnership with Operation Hope, where our bankers can share a brochure where you can do entrepreneurship course online for free. You get business planning projections. Naturally, I'm a bigger supporter of working with local organizations and use that local support every time when you can. And we have some amazing partners here in Columbus, some of them in the room. So use those. But if you can't, we have that other option for you to do online as well. So just get a flyer, look on the back, business plan, 3 years of projection, personal financial statement, 1 year personal tax return. If you're a business, you might want to look at your debt schedule and some business tax returns too, but it depends on the situation.
So what I would say is that it really just varies based on your request type, how much you're requesting, and it really depends on the situation. Here's the reality, and this is what I'll say. It's just important for you to come talk to us, because I may need a business plan and then I may not. All right. I may need 2 years tax returns, and then I know this is going to sound crazy, but I may not. Right. It really just depends on what you're requesting, how long you've been in business. So it's very versatile in the fact that we don't have a standard process for what you might need, but we can share that once we understand exactly what you're looking for. So my team and myself are happy to have those conversations.
Yeah. Go ahead. It's okay.
Okay, so it varies, but I will go with the standard.
Please.
You're going to need 3 years tax returns. If you're a startup business, you're going to need a business plan with financial projections. If you're an established business, you don't need a business plan, but we might want a summary of the business for you, just an executive summary of what the business does. And you're going to need the tax, you're going to need to, hopefully you have filed taxes on the business. So that is very important, whether it's a Schedule C, 1120, a 1065, whatever it may be. So that would probably be where I would start the standard with, is your plan, financials, projections, and what you're going to be using the funds for.
Okay.
Just want to add collateral. SBA doesn't require collateral for loans under $50,000. Now, that's different for ECDI. With ECDI, we lend them money to lend to you. With the banks, they lend their own money. We just guarantee it in the background. So it's a little different for them. So $50,000 or less, you don't need collateral. Now, another thing I want to mention, if you do need collateral and your spouse is or significant other is on that collateral, like a home, have this conversation with them before. And it's funny, but it's not funny, because I've had closings blow up because, they brought their spouse and they didn't know what they were there for. And they said, well, you're going to have to sign away your dowry rights to the home. Well, I'm not giving away my home for your business. So have that conversation, and don't make your banker the bad guy.
Yeah, please have that conversation. And I want you to keep this in mind. In Ohio, in the state of Ohio, there is something called dowry rights, which basically means just because your spouse's name is not on that deed or that mortgage, he or she owns 50% of that home. So they have to sign to say that it's okay for Jerome business to use the home as collateral. His wife, spouse, has to come in and sign those documents. It is a ugly conversation if it does. Right, exactly. If you don't have that conversation, because most of your bankers, your relationship managers who's walking you through this process, they're going to tell you well in advance what type of collateral is going to be taken.
So I'm going to give me 1 second. I'm going to work in some of these questions that we have into the conversation, because we're hitting on some of them right now. So we talked about collateral, and we're talking about the home. So you're a homeowner, you're resident. In what scenario would they have to pledge their home as collateral? Is there a loan amount? And at what point, or do they have to personally guarantee the loans as well? Meaning you're acting as a co-signer for your business.
Let me take a crack at this one. So SBA, anyone who owns 20% or more of the business must personally guarantee the loan. Now, we may even ask for someone who owns less than 20% if their involvement in the business is integral to the effectiveness of the business. So if I hate to pick on restaurants, but I'll use restaurants. If you don't know how to cook, you're gonna need a cook or someone who's very involved in that side of the business. If you can't make it without them, we may, it's rare, but we may ask them to guarantee the loan as well, or to sign on the loan as well. What was the other thing you said?
So anyone who owns 20% or more interest in the company, as well as possibly key people in the operations of the business as well. And then my other question was in regards to personal guarantees. When or if is a personal guarantee required for?
Always.
Always.
That's never.
Jeff, you gonna say always too?
Well, yeah, I can say always.
Okay, maybe different.
Yeah, so it's
Okay.
always it's a little different for how we look at lending for small loans, right? We can do some straight just business credit type of lending that doesn't impact your personal, but generally it's a good idea to just say always. Again, we nuanced conversation, right? And we can have that when we have it, but generally speaking, we will need a personal guarantor. Generally,
Okay. Galina?
I can, and I pretty much always. The only time personal guarantee will not be needed, and that's not for the program I manage, but if you have a very, very, very large business that's usually publicly traded, then there's no personal guarantees. We don't engage in those as much. It's more the commercial banking part at the Huntington, but they do that. So I want to touch on the real estate part. So my program doesn't necessarily offer real estate loans, where we know if you offer real estate loans for business, you have to have the real estate as part of the collateral. But since a recent change in June, if you have under 165 small business scoring system score, 165, or if you have larger SBA loans, then the SBA is going to ask for all available collateral. The real estate you own, depending on the bank situation, we do have some flexibility. We can ask for less than the SBA, but we can ask for more. It's either 20 or 25% equity. If you have that much, we need to put a lien on your personal property. That's where the situation with the spouses come in. We have cases where the spouses don't want to be part of that experience. We have cases when the spouses might be in a process of legal separation or divorce. That is not a good situation to get after a SBA guaranteed loan because it's just not going to work out until you're legally married. I come across situations like this all the time. So be aware. So if there is equity in the home, it's not a very complicated process. At least at the Huntington, we don't do appraisals. We don't charge you fees. We just want to make sure that there is some equity based on what we see. There is liens on the property, and we put additional lien after the fact, okay? We need to take all available collateral. I'm going to throw some life insurance situation there too in those cases for the low-scoring SBA loans and the higher amounts SBA loans. But that's a different topic, and it's a little easier to obtain when it comes to that. But that's when the real estates are involved. Naturally, if you're having a loan that involves a purchase or refinance of your real estate or major improvement of the owner's occupied real estate, you're going to have to put the real estate as a collateral. I'm just going to throw that in there.
So you mentioned that SBA score again, and one of the questions is this a PAYDEX score taken into account for the loan consideration? No, I didn't think so.
And
So,
real quick on the
Yes.
SBA score. My experiences, and of course, Jerome is the expert in the SBA for a long time, but my experiences for many years, many things can impact your SBA score. So depending on the kind of industry, some industries are less risky. He mentioned restaurants, very risky. Daycares, not as risky, potentially. Medical, not as risky. How many years in business? What are the revenues? What is the net worth of the owners? All that impacts the score. So, but nobody knows how exactly. The better, the better.
But I've never seen that SBSS score, it's called an SBSS score, be acceptable and you have a 400 credit score.
Yeah.
It's going to really drag that number down. It's going to be almost impossible, regardless of experience and everything else.
Well, we have seen it improve quickly too. We have some, because we pull ASBSS score twice for our program and for the large ASB loans, one in credit, one in eligibility. Sometimes it might take 30 days in between, depending We've seen it go down, we've seen it go up. So please be aware. Anything can impact that. It's kind of like buying a home when they tell you don't do anything until you get it done. So don't do anything. Don't do any consumer financing. Don't buy dryer and washer. Don't refinance your home. Don't max out your credit cards. I will always say
Don't do
that.
anything.
Nothing. Just don't do anything on the credit until you get final approval.
Don't go to a fast cash.
Right. So they're pulling twice, guys, right? They're pulling twice. So like any other kind of loan that you might get on a personal level, a car loan, signature loan, credit card, they only pull once. But when you're going for these SBA loan products, they're pulling twice. One, to initially see where you're at, and then two, again, to make sure that what they've gotten back from the SBA, what they're still seeing is you're still in good standing. So we have several other credit questions. I'm going to circle back to them, but I want to address this one here. In its regards to agricultural development. And so this individual is looking for financing for a business that would be considered agricultural or in a rural area. So, and also with that, so they're having a wedding venue, but there's also a small cattle farm that's there as well. USDA. Okay. And is funding for veterans any different? So let's tackle those two questions there, if we could.
I can speak real quickly on that. The program I manage, we do not get engaged in agricultural specifics business, but we have done in the past. Imagine you have a horse farm. We could potentially finance equipment or some kind of like tools on etc. We might. We will not purchase the horses. Somebody asked me on Monday, can we finance the horses? No, we cannot finance the horses. At Huntington, we do have a special department that works, it's called USDA department, that work in rural areas, government programs. I don't know details, agriculture. We have solutions. I'm not as familiar with them. We do have it. That's the beauty of a big bank. We have pretty much everything you can think of. But on my program, we stay away from the livestock
I would say
and the land.
if it's agricultural, USDA and FSA, Farm Services Agency, those are probably the two that I would go to first. Technically, the SBA can do a farm. We just don't do many of that here. We can even take, and I didn't know this until I looked it up in the SOP, we can take livestock as collateral, which shocked me because what are we going to do with it? But technically, we can.
Ken.
So ECDI does have funding from the USDA, such as that we receive funding from the SBA and many other funders. So but we want to make sure that the business is located in a rural area for it to receive the USDA funding, and it would still go through our regular application process.
And veterans, is funding any different for veterans?
We have a Veterans Advantage program. It just waives the fees for veterans, widows of veterans, or spouses of veterans. You don't pay any fees on an SBA Veteran Express loan. So think $350,000 or less. There's no fees.
Well, our program obviously covers veterans, and that will include reserve, will include guard, it will include active duty. Of course, we have to have somebody else running the business. Keep that in mind. But that's part of our offering when it comes to the specialty program we have. So again, no fees and etc.
Same thing with Right Pat in the SOAR program. It's designed for women, veteran, minority-owned businesses. So in that space, we would handle those just like we do any of those other segments in that demographic. Like she mentioned, if there is active duty, or it's got to be another person in the business, operating in the business, running in the business, or running the business rather, if it's a veteran-owned business, but generally speaking, we can handle those exactly the same way we do.
Same here. We will run the same loan process. Veteran loan funds that we have right now, it's up to 50,000 at a low interest rate of 7% on the term for veterans. And what we would need is something showing that you're a veteran, DD 214, some type of discharge paperwork that shows that you've been in the military. Okay?
So if your business fails, how are your personal assets addressed? So I've now pledged my home. I've now did a personal guarantee. My business fails. You've liquidated all of my business assets. I would assume that's first, right?
Jerome gonna
Now
ride
what?
off with a horse. I'm gonna tell y'all that right now. Jerome coming to get the livestock. He riding off with the horse and the carriage.
I'm just going to say real quick, clearly I'm not an expert in what happens after that. We do have a department that works with that. We hope we never see that. But one thing I can promise you, and I work very closely with those partners in the bank, we have a financial recovery group that the first steps they do is try to see, okay, can we work it out somehow with the customer? Can we do modification? Can we do extension? Can the customer, even if the business is completely out, the owner have a job where they are able to still pay us back to the level we agreed with, so we don't put that stain on their credibility that they had a loan, especially if it's an SBA guaranteed loan, and they let it go. Because if the bank, unfortunately, has to prepare the credit file and go to the SBA for the guarantee, and my program has the biggest guarantee in the country, 85%. I am not an expert as Jerome, but my guess is that you're never getting an SBA loan again,
And
ever.
at Right Pad, if I could just add, we really try not to use your personal residence or your personal property. We can, but it's like last resort. And generally in my program, that's not even something we entertain as frequently as we would on the conventional side, right? Where we're looking at the loan like we would any other business that's not women, veteran, minority. To her point, really, before we get to a collection, we have tried absolutely everything. We have tried workout loans, and we have tried to restructure the deal. I've even been able to approve, no payment for like 3 months, 4 months for people.
All the time.
So that happens a whole lot before we get to repossession or taking your collateral. But we can do that. And when that happens, it's a department outside of me. And I don't know what the details are in that, but it's generally very rare because people pay us back as they've agreed in this. So, yeah.
And the main time when it comes to repossession and comes to such a negative outcome is usually when the client really doesn't want to work with the bank at all. And they don't respond and they don't participate. You want to work with the bank, you're participating. We are willing to work. We do not want to collect houses. We don't want to collect horses. We don't want to collect any of that. We want viable businesses and people that are able to make a good living and pay their obligations.
And
You wanted that.
Let us all keep in mind that I always tell a client, it's if you default on a loan or you're in default, that means you're not communicating. That means you're not working anything out with your lender or anything. Our jobs up here is because if we're putting people out of their homes, we can't really be about community. We can. I mean, let's just be honest. So it's as customers, as clients and things like that, it's really up to you to make sure if you're in a bind, like we do have a 2-month hardship at ECDI, but if you're in a bind, you can't let us know after you're 30 days past due. You want to start talking before you get to that point with any lender. And, as Jeff said, he's been able to waive 3 months. So not waive, but move it to the back of the term, I would say. So guys, it's really, we're not collectors. We're not going to be knocking on your door looking for funds or anything like that. But we do want you to know that you have to be willing to work. If you're in a position where you can't pay for a month or 2 months, talk to somebody. We'll get you in front of people that can help you with a hardship, maybe refinance your loan, or maybe look into doing something with your terms. I just think when we talk about this, yes, it is a scary optic, but it only gets scary if you choose not to communicate or work.
I get people who call and they say, well, I'm trying to talk to the bank, and usually you're not telling them what they want to hear. Well, I want to work directly with the SBA. So the way our guarantee program works, once you default, we cut the bank a check for 85% of their loss if the loan is less than $150,000, 75% of their loss if it's over $150,000. Once we cut them that check, You don't want to talk to us because then you're talking to the collectors and they want to make the government whole because the government cut the bank a check. So everyone who's eager to say, well, I'll just talk with you guys, they're not easier. These guys, no, they come in and look, how much can I get for that table and that chair and that desk? You don't want to negotiate with the SBA. Negotiate with the lender first. You're more apt to get a favorable outcome if you do that.
And I just want to say one thing, as I believe we're wrapping this part up, Ms. Harvey, but it's what I hope you're hearing is how important it is to really have a relationship with your lender.
Okay.
All of the relationship managers who work on my team, those lenders, they're giving their cell phone numbers. They're checking in with you. They're communicating if you're missing payments, right? We want to know how the business is going. Please find people who you resonate with as you go through this commercial lending journey. And if you don't feel like they're validating you, or if that's somebody who you could reach out to in hard times, or somebody who could, maybe advocate for you, then that may not be the right financial institution. So please shop your lender just as much as you might shop rates or anything else.
Okay, so we need to wrap up. What do y'all think about the panel? Good? All right. I'm not going to send you away without answering these last couple of questions quickly. I'll let you, you want to add something? Okay, let me ask these real quick and then I'm going to let you add. I'm going to let Ken go ahead and, are you sure? Okay, all right. So if you have good credit but no personal default, but your spouse does, will this mess you up your chances? Yes, if he is a part owner in the company and he's having to be on the application, that can impact your ability to get funding. Okay, so yep, that one. If you write off your business taxes, and there was another one that was basically what specific underwriting criteria carry the most weight. If you are showing a negative for your business income taxes, meaning that you've wrote off all the possible expenses and then some because your accountant or somebody else told you to do so, and now you're showing that you didn't make any money, but you are now in the negative, you have to show money to be able to qualify for a loan, right? Just like any personal loan that you go after. You're going to give them your pay stub. They're going to look at your income. They're going to put that against your debts to see if you have enough money to pay it, right? So if you're writing off everything in your on your tax returns, showing a negative position for your business, there's no money to pay a new loan, right? So you do have to show positive income. You need to show a strong cash flow. So when you're thinking about going for funding and we think about what is one of the main or specific eligibility requirements beyond any kind of credit scores, beyond the credit profile, is the ability to be able to repay that debt, okay? Let's see here, what else we got? Building business credit. Building business credit comes to acquiring business debt, be that a credit card, a small business loan, anything like that, like an equipment loan, a loan that you have with a vendor where you're buying specific products that is reporting to your Dun & Bradstreet is going to help you to build your business credit. And your Dun & Bradstreet can assist you with that. Some things are free, some come with a cost. So you want to make sure that you have your Dun & Bradstreet number, and that is free. So that is wrapping up our panel discussion. Some of our lenders are going to be able to stay with us today. They're going to greet you at 12 o'clock. We're going to dismiss them and allow them. No one else had anything else to add?
All I want to add, everybody, is that on this table, and we have quite a few other partners that are available in the local community that are reliable sources for access for business capital. Go talk to them. You feel comfortable. Just don't fall into the trap of the easy money, especially online. If something sounds too good to be true, it is. Every time when I talk to a business in the community that has been gotten a bad loan, a cash flow situation, they say it was just too easy. It hurts me personally to hear that. If something's too good to be true, probably it's not. Please don't get any fast money. Talk to people. Talk to people. I am personally not offended if you take a loan from ECDI or from Right Path Credit Union because you didn't take it from the Huntington. Just don't fall into the trap of predatory lending, please.
And I get that all the time. And I have it's a sore spot with me. If Rapid Advance, On Deck Capital, I don't mind naming names. If anyone calls you and says, "Hey, I can get you $100,000 by the end of the week," hang up the phone, because it is horrific. It has literally run businesses out of business because they take money out of your checking account every day, and they take it from the top, not from the bottom. They don't care if you're making money because they're getting it from the top, and it will kill you. Don't do it.
Okay, and then we're gonna close with 10.
Don't do it. Reconsider. Read the literature. Do not do it. My blood is boiling right now every time I hear that happens, because I've seen some really good businesses fall because of this. And I mean, I've seen instances where they're paying $5,000 a week. A week. That's $20,000 a month. Like, don't do it. Hey, just don't do it.
Okay, don't do it. All right, that's our closing statement.